20 large companies, well-known companies that are on huge discount sales right now. So the stock market has been experiencing a lot of volatility recently, and with this there comes a lot of opportunity even if you're a long-term investor. Some really big name companies out there have taken a huge hit in the last few months, especially in 2018. And I want to take a look at some of these companies and show you that there's a lot of great opportunity out there right now. So stick around because we're going to go through 20 different companies that I believe are at a great value right now. Welcome back to another video. Make sure to hit that subscribe button down below if you enjoy these videos, but without any further ado, let's get into our 20 top stocks that are on sale right now. So I want to say that I kind of skipped over these generic consumer staple stocks like P&G, Clorox, Johnson & Johnson, because that sector as a whole has taken a huge hit. So if you look at any company for the most part in that sector, a lot of them are down between 10 and 20%, sometimes even more than that. So that right there is a great opportunity, and I will be making a separate video just on that if that's something you guys want to see. But there's a lot of stocks that I follow that aren't in my portfolio, and I like to watch these stocks and wait for opportunities to kind of pounce in and take a position on them when I believe that they're at a great value point. So this weekend I took some time to actually look through this watch list that I have, and I noticed that there are quite a few stocks that are at a great value point right now, even though these are well-known companies, well-established companies, and they're posting phenomenal numbers right now. So some of these companies that we're going to go through might be a good swing trade, but a lot of them will be a good long-term hold as well. So for the most part, these are all well-known companies. Some of them are even in the Dow 30. And some of them even pay you a handsome dividend. So if you believe in any of these companies that I'm about to go through, it may be a good point right now to start opening up a position in this company. Don't go all in my opinion, but you can start averaging in, and if it dips a bit lower, average in a bit more, lower your cost basis. And over the long term, I still believe that these companies will still be solid performers. Alright, so let's get through this list now. We have 20 stocks we want to walk through. And what I'll do is I'll start with the stock that's on the smallest sale and work our way up to the stock that's on the largest sale. So one thing to keep in mind is that I pretty much looked at the 1-year charts of these companies, and I pretty much picked the top point or the highest price that it hit in the last year and where it's at right now to calculate how much of a discount we're at. Alright, so the first company to kick off this list is RAYTHEON, which is on a 7% dip. So this is again the smallest sale that I have in this list that I'm about to go through. And RAYTHEON, if you don't know, is a defense stock, and they typically do well in times of uncertainty, market uncertainty, economy uncertainty, because it is a company that's out there to kind of help with defense related things. Next, we have a company called Waste Management. It's a company I've talked about on this channel before, and they're at a 7.5% dip. So these guys, in a nutshell, they're a garbage collection company, and they're actually the largest company in this space in North America. So a very solid play here with a solid dividend as well. Third, we have HONEYWELL with a 8.5% dip. So HONEYWELL, if you're not sure what they are or what they do, they're a very well diversified company. They make things for consumers. They're in the aerospace industry, they make manufacturing equipment. They're kind of all over the place, and they're a really well diversified company. So coming at number 4, we have Google with an 8.5% dip. I don't really need to talk about this company because everyone out there already knows what Google does. Number 5, we have McDonald's with a 9% dip. Again, a very strong brand, one of the largest, if not the largest restaurant chain in the world. And they're doing a lot of great things with technology to incorporate that with their brand and their products. So they are getting a lot more consumers into the store with technology, with things like Uber Eats, their app, coupons, mobile orders, all that kind of stuff. So they're doing great things, and another great company on a great discount. Number 6, we have Caterpillar with a 9% dip as well. Caterpillar, if you're not familiar, is a construction company. They build manufacturing equipment. Like if you look at a construction site in your area, you'll most likely see a Caterpillar tractor or crane or something like that. Number 7, we have Disney with again around a 9% dip. Disney is a company that's been talked about a lot in the last year or two. And I don't think 2018 is going to be the real year that they're going to shoot up, because everyone's waiting for 2019 when they plan to release their streaming service to compete with Netflix. But it might be a good opportunity to get into the stock earlier before all the hype starts and everyone starts flooding into the stock if their streaming service is successful. Alright, next we have SHERWIN-WILLIAMS with a 9.5% dip. Any painting need that you have, it's pretty much going to be one of their products, and they're pretty much the dominant player in the space and have been for the longest time. Nothing's really changed fundamentally with their business. It's still a very strong company. People still need to paint, and it's at a great value point right now. Next we have Home Depot with a 10% dip. Home Depot is the largest North American company for any sort of home improvement needs. So if you want to renovate your kitchen or your basement, you typically go to Home Depot to buy all the equipment for that, whether that's wood, steel, shelving, whatever that may be. Home Depot is kind of the go-to place. Lowe's does come in at a second in this industry, but Home Depot has a very strong hold on the market. Next we have Lockheed Martin with a 11% dip. So this is another defense related stock, another stock that does well in times of uncertainty, in war situations, that kind of stuff. Right now, there isn't really a lot of fear with that. There is some tension around the world, but there isn't too much fear with the war happening, which is why Lockheed Martin is kind of taking a hit right now. Next, we have Travelers Company with a 12.5% dip. And a lot of people haven't heard of this company, but essentially what they do is they're an insurance company. So they have been performing pretty well, but they have been taking a dip recently, and they are a Dow 30 component as well. So it might be a good stock to look into to, again, diversify your portfolio outside of the typical tech stocks. Next, we have Goldman Sachs with a 14% dip. Now, this is one of my personal holdings, and it is a company that I do believe in right now. It is a very strong company, and in times of market volatility like we are experiencing right now, this is a company that truly benefits from this immensely. So Goldman Sachs is a definite stock that I want to have in my portfolio right now. Next, we have Tencent with a 15% dip. So this is another stock in my portfolio, another one of my larger positions, and it's a company that I truly believe in. They're a giant in China. They're doing a lot of things right, and they're very well diversified as well, which is why I love holding this company. There's a lot of different revenue streams, there's a lot of different ways that they acquire customers, and it's a company that I think will be one of the dominant companies in the future. Next, we have Applied Materials, which is at a 17.5% dip. So these guys are a semiconductor play, and semiconductors are kind of taking a hit recently, but they are bouncing back slowly as we see guidance raised and all that kind of stuff. Micron and Nvidia are kind of the leaders in this space, and Applied Materials is no joke as well. They have been posting incredible numbers, but the stock has taken a big hit recently after the last earnings because of fears of weak sales of phones and all that kind of stuff. I think these fears will blow over. I think the stock will recover nicely and will be back at its all-time highs, especially if Micron and Nvidia keep moving up the whole sector higher. Next, we have a company called eBay with a 18% dip. So this is another huge e-commerce giant, a company that is at a great value point right now in my opinion, great low forward PE for a tech company, and it's a company that I may be adding to my portfolio, so stick around for that video coming up in June. But either way, eBay is definitely on this list. Alright, now we're getting to the last 5 stocks, and each one of these is over a 20% discount. So with that comes some risk, because if they have dipped that much recently, there is potential for more downside. People do say that, oh, maybe we're bottoming out, but they could have said that a lot of times as the stock was dropping as well. So keep that in mind. These are higher risk plays, still some stable companies, but you have to have some sort of higher risk tolerance if you want to play with these next 5 stocks. Alright, so we have 3M with a 23% dip, a strong company, well-known company. They do things like adhesives, tape, all that kind of stuff. And they are a very, very strong company, but they are showing some weakness lately. Again, if you believe in this company for the long term, this may be an awesome opportunity with over a 20% discount right now. Alright, next we have Walmart with a 24.5% dip. So Walmart is a company, again, I don't need to talk about. Everyone knows Walmart. Most people here have shopped at Walmart. And it's really a company that's been taking a beating recently because of the whole Amazon fears. Their retail numbers have been pretty good, but their online numbers have been pretty poor, which is what investors are watching and waiting for. But this is kind of the year that I think, if any, Walmart will turn their business around. So if they don't really get it right this year, I think that's pretty much the end of the company. It's going to be downhill from here. But if they do manage to turn things around and actually have their online business booming, I know they are working on a better website and all that kind of stuff. But if they do get that booming, I think they'll be at a good position to be a strong number 2 to Amazon. Now getting into the final three, we have JD with a 27% dip. So JD is an e-commerce play. You might not have heard about this because it is a Chinese company, but they are very large in China. They are actually competitors to Alibaba. They're the number 2 in that space. And they have over 300 million active customers. So that's not a small user base by any means. Now, they've been experiencing a lot of volatility in this stock recently because there is, again, fears with the whole trade wars and all that kind of stuff. So if you believe that JD will actually be one of the biggest companies in China in the next few years, this is, again, a great opportunity to get into the stock. Alright, so next we have Monster. So Monster Energy is at a 28% dip right now. And it's a company that's not as large as some of these other companies in this list, but it is a company that's well known and has a good brand presence, especially in North America. So these guys, of course, make energy drinks, and Coca-Cola actually has a stake in this company. So there is a lot of support behind them. They have no debt on their balance sheet. They have good numbers and they are showing growth this year. So this might be a good stock to watch for a good turnaround plays, potentially for a short-term swing trade, but also for a long-term hold as well. And finally, getting into our last stock, number 20 on this list is a company that, of course, I could not skip. It's, again, one of the most hyped stocks and talked about stocks this year and last year, I believe. And it goes by the name of Tesla. So Tesla is at a 28% dip as well. And this has been a stock that's been really underperforming the market for a very long time now, for the last few years. And again, I want to make sure you understand this is a very high risk play. If you believe that Tesla will be around in the next 5 or 10 years, this is a great opportunity for the company because that means there's a lot more potential in the stock. But if you believe that this company could suffer some financial trouble, especially if we get into a recession, or if they don't meet their demand and their costs keep rising, they could potentially see bankruptcy. There is a lot of risk involved with this, so you really have to weigh your pros and cons. Maybe put a small position in this, if anything. I wouldn't suggest going all in on the stock, but again, I'm not a financial advisor, so that's completely your call. But again, with all of these stocks in this list, I do advise that you do some more research, maybe take a look at the balance sheets, look at the stocks, some of the technicals, and make some informed decisions here. Don't just blindly buy these positions because they're on sale right now. There could be deeper reasons why these stocks have taken a dip, but a lot of them, again, are solid companies. A lot of them are Dow 30 companies, and they have been around for a while, and they will be around for a while. So I hope you enjoyed this video. I hope this was informative and kind of opened up your eyes to more companies out there that are not just tech, but they also have a great opportunity to the upside. And I do hope that these investments do provide you great gains in the future, because that's what we're here for, right? We're here to get gains, we're here to invest positively, and we're here to help each other grow and make smart investment decisions. Either way, guys, if you enjoyed this video, hit that subscribe button down below and hit that like button as well to show your support. Let's get 50 likes on this video. Thank you so much for your support. Make sure to check out my new Facebook group, 100% free. I'll leave a link in the description and in the comments, as well as follow us on Instagram as well. I'll be posting sneak peeks of new videos that I have planned and all that kind of stuff on there, so make sure to follow that as well. Either way, guys, thank you so much for watching, and I'll see you in the next one, and don't forget to invest positively. Peace.